Hello, everyone. My name is Wente Yun, MD, from Wen Yun Advisory. Today, we will discuss FATCA. FATCA stands for Foreign Account Tax Compliance Act, a U.S. law that focuses on transparency of overseas financial assets. What is FATCA? FATCA stands for the Foreign Account Tax Compliance Act. It is a U.S. law enacted in 2010. Under FATCA, many foreign financial institutions must report certain accounts held by U.S. taxpayers. Who must report under FATCA? FATCA may apply to U.S. citizens, green card holders, and certain U.S. tax residents. It may also apply to certain foreign entities with U.S. owners. When foreign financial assets exceed reporting thresholds, it may also apply to certain foreign entities with U.S. owners. FBIR and FATCA are different reporting systems. FBIR is filed with FinCEN. FATCA reporting is filed with the IRS using Form 8938. Now let's compare FBAR and FATCA. FBAR focuses on foreign bank accounts. It is reported to FinCEN using FinCEN Form 114. FATCA is different. FATCA focuses on foreign financial assets and is reported to the IRS using Form 8938. In many situations, taxpayers must file both. Now let's look at FATCA reporting thresholds for a single taxpayer living in the United States. The reporting threshold is $50,000 at year end or $75,000 at any time during the year. For married couples filing jointly, the threshold increases to $100,000 at year end. If you live abroad, the thresholds are significantly higher, and FATCA reporting is filed with your tax return using Form 8938. Now, let's look at what assets must be reported under FATCA. FATCA focuses on foreign financial assets. This may include foreign bank accounts, foreign brokerage accounts, foreign companies, and other overseas investments. If these assets exceed the reporting threshold, they must be reported to the IRS using Form 8938. First, thinking FBAR is enough. FBAR and FATCA are different reporting systems. Second, forgetting Form 8938. FATCA reporting is filed with your tax return. Third, missing foreign investments or financial assets. Understanding these rules helps avoid costly penalties. Today, global assets are no longer invisible. Under FATCA, financial institutions around the world report certain foreign accounts connected to U.S. taxpayers. Responsible reporting protects you from future compliance risks. If you need assistance reviewing or preparing FATCA reporting, you may scan the secure intake form below. This concludes our FATCA education series. Thank you for watching. This discussion is educational only. If you are uncertain about your situation, prior consultation with a knowledgeable advisor may be helpful. Today, many families hold financial accounts across borders. With global assets comes global reporting responsibility. Understanding these concepts helps maintain financial transparency and legal compliance. If you would like more educational information, you may scan the QR code below. Consultation services may begin only after the intake form is completed. Thank you for your watching.